Good evening, everybody. Sorry for the delay. The old whatever can go wrong at the last minute goes wrong. As we can see, we had a nice bounce today in the markets. Now that's where we have to be careful because we've had a significant pullback. More than likely, now that they've failed at the 200, they're going to come back up and test it to see if it's going to act as support. Or I'm sorry, failed at the support. Now they're going to come back and see if the 200 is going to act as resistance. If it doesn't, then we can start thinking about heading down to our 200 or back to the 50. Yes, the Fibonacci number. This is what I was illustrating right before the close. Is notice where they bounced. They bounced right smack dab off the 38% retracement level. So a lot of people ask, do you use the Fibonacci numbers? Only to see if there's a reason for a reversal at a particular level. And today, that reason was apparently the Fibonacci number. All right, the other indexes. The NASDAQ, I didn't even throw a fib number on here. Let's see what this one looks like. Yeah, pretty much the same, right at the 38% retracement. Plus, notice where the NASDAQ bounced, right here at the 200. So I wouldn't doubt if we don't have another day to the upside. Now it's a good possibility of having another day at the upside. Obviously, if we see it open and start trading down, this was just that one-day bounce. And the transportation index did a hammer type signal. And where did this occur? Right about the exact same level it bottomed out here last time. So, all right, with that, let's take a look at some of the commodities. Crude oil got a boost today after trading lower, but notice it didn't do any real major reversal signal. Again, I would suspect they could bring it back up to the T-line, then just watch to see what it does from that level. Now, we've been short cattle, and notice what cattle did. After a strong downtrend, a reverse, where back to the T-line. Then yesterday it was down the limit. Today it practically opened up down the limit and went down. So because I couldn't get more of this, if the meat market is selling off, went after the lean hogs. Notice what the lean hogs did. Came up right smack dab to the T-line, did a bearish left-right combo, telling us probably our J-hook pattern is in progress. Oh, let's see, UT. Oh, yeah, nothing there yet other than because it's crude oil, probably going to be bouncing up to the T-line. The dollar, as you can see, has been doing a nice little J-hook type pattern. And where does it keep bouncing? Right smack dab off the T-line. There's our left-right combo. So if the dollar is continuing to act strong, tells us our euro continues to act weak. Came up, bounced right back to the T-line, bearish engulfing, left-right combo. Price still in this downtrend. So anytime we see a bounce, we still have to have one major criteria that tells us we have two major criteria. First criteria is we need to see a candlestick reversal signal confirmed. And that confirmation on a bullish harami like we see in coffee would be a positive open and start trading positive. If you're short, you cover your short position, but then we need to see the next criteria that they can get it back up through the T-line. So we are short coffee. If it opens positive tomorrow, we'll close it out. But that doesn't keep us from watching to see if it hits the T-line and heads right back down again. So remember, one up day in a downtrend does not a trend change make. I don't know whether that made any sense. So we're still got to see how they open these markets tomorrow. All right, some of the stocks that we've been following, KPTI still has not been able to close below the T-line. Looks like another J-hook type pattern moving up. We recommended ZFGN the other day. This is one that David L. kind of pointed out in the chat room. You can see what's happening here, a fry pan bottom. So here's the illustration of what a fry pan bottom tells you. If the market was selling off hard, look what was happening in this chart. It was still trading up, and it had a big day on a big day today, but these 3 days when the market was heading down, still also stayed up above the T-line. Coffee, after the confirmation, then the stop goes halfway down. More than likely on coffee, if it opens positive tomorrow and comes up to the T-line, probably close it out on the open. Then if it moves up to the T-line, then we'll put our sell stop right back where it opened, because it came up to the T-line and then came back down through the open, then you're more than likely going to, it's telling you that they aren't going to come up or stay up above the T-line. You're still in a downtrend. The target, first target on ZFGN would be filling this gap right in here. Then if they're getting it moving, your next major target right here at the 50-day moving average. All right, the oil started popping back a little bit. SGY, I don't know why these charts are so slow tonight. Kind of doing a cup and handle. Notice where it did the doji bullish confirmation right on the 50-day moving average. Wouldn't be afraid to be buying this one, because if they get this one moving, the next major resistance level is your 200-day moving average. Ranger Resources, getting right here to the resistance level after a Morningstar signal. I'd still be a buyer of this one on positive trading, breaking out through this level. What else did we have in that area? BCEI. Another kind of cup and handle setup. Wouldn't be afraid to be buying this one on positive trading tomorrow. And RSPP, big fry pan bottom, and we're just breaking out of it. Let's make this a little bit smaller. Could have another move like this. This was about 7.5 points, 8 points. That would take you up into about the $35 range. So everything that's kind of had a pullback, but couldn't pull back very hard, like Kendai, gap down. Now it's kind of doing that J-hook pattern. We did a bullish left-right, or a bullish engulfing today, right on the T-line. Stochastics starting to curl up. And look where all this is occurring, right here on the 200-day moving average. That's significant in the sense that everybody else can see what's happening at the 200-day moving average. And now that they're back up above it, that means you're going to have a lot more confidence coming back into that stock or a J-hook type pattern. SLCA came right back to the 50. This is where you kind of observe the obvious. They broke through the 50, pulled right back to the 50 active support. This now becomes your next target. TTPH finally got through the 50 with the 50 coming down. But right now, as long as it stays above the T-line, you want to stay with this one, because there's a good possibility of another pop of that magnitude now that you're above the 50-day moving average. Some of the biggies, like Netflix, bullish engulfing, and you can see, well, maybe you can't see. You can see you're in this channel wedge formation. I'd definitely be a buyer of Netflix if it comes back up through this resistance level. Whiting was another oil company that's trying to base in here. There is something drastically wrong with the slowness of this software. So I hate to shut this down, but I'm going to. All right, smoke them if you got them. Let's just do this. Let's clear this. And they've cut down all the trees across the road. No, just as slow. So, son of a gun. All right. Baba looks like a bounce back up to the T line. Now, do you have cattle? No, I got one cat, and that's one cat too many. That was a no problem cat. Because for Sandy, it's no problem. If there's any problem, guess who has to take care of the problems? So this allows you to see what's happening in a price trend. If we see that there's a bounce up here and they fail at the 200 and the T line, that tells you start looking for a, that's right, 4 cats too many. That tells us they're taking it down. This is a good opportunity with a clear vision of when to start shorting. And again, this would be a case too that if it opened positive, hit the 200 and started backing off back below where they open it, that's a good entry for going short. We're short WDC Western Digital, and it came up, tried to do a bullish harami. It did do a bullish harami, but same scenario. If it opens positive, we close it out. And then if it moves up and then comes back down through the open, we can reshort it. That scenario kind of keeps us from staying short and just watching it do this. We're getting out way too late. So we know what should happen from a bullish harami in the oversold condition. If they open up positive, the bulls are taking control, you close out your short positions. Seagate, yeah, but Seagate didn't do a reversal signal today. That's not quite a bullish engulfing signal. It's definitely not a harami, but the suspicion would be that they could bounce it right back up to the T-line. And then Wynn Resorts, it was trading weak most of the day, right up until near the end. But same scenario, if it opens positive, you close it out, your short position, because this still has a pretty strong signal, which was your doji gap down. But supporting right here, your stochastics aren't quite in the oversold area, but notice where it's supporting, right at the same level it bottomed out before. Well, I got WTW on here, which is almost the next one. All you can do with this one is stay long. Notice the pullback today was very indecisive. I'll get to TIF when we get over to the short positions. Amazon was trading off big most of the day and then came back up, but notice the one thing that it didn't do. Didn't get back up above the T-line. Yeah, hold on to your individual requests until I tell Jim to do the double line, and then you can put in 2 requests. MRTX. I've been watching this one because of the big fry pan bottom. It sold off hard right to the 20. This one you still buy if it starts trading positive tomorrow. Amazon going to the 50. we don't know that yet. That'll be something that we can get a better feel for based on how they open it tomorrow. If they do open it lower, yes, you have the pullback potential to fill this gap, which would also coincide with moving back to the 50-day moving average. Okay. So some others that are setting up nicely right now. ANVN. This is where you observe the obvious. The obvious was when they hit the 50, it consolidated. But we know it consolidated versus reversed because notice how indecisive it's trading. And then probably more coincidence than anything else, but then we have a big day. That pretty much tells us if they came up to the 50, consolidated, and now gone through, they could bring this all the way back up to the 200-day moving average. This one is setting up for our proverbial McMuffin. Notice our Morningstar signal, then our doji. Makes this very simple. If they open this positive tomorrow, expect another day the same magnitude as that day, which tells us our J-hook pattern is in progress, which also tells us our next target is up here someplace, which would be a good, 40% return? When you say filling the gap, does that mean a previous gap up? Yeah, if there's a gap that would happen in the past and the price is coming down toward it, more than likely that's the target. They're going to come back down to fill that gap. Now TAL was pointed out in the chat room today. This has got a nice big fry pan bottom, and observe the obvious. Where did they break this out? Right at the same level it started. This one you can be buying with the expectation that this one's heading for the 200. HCLP. There's a Morningstar signal. We know at least our first target is up here to the 50, but if this is wave one, wave three should break through the 50. So that's one you can be buying on positive trading. Now that type of chart is prevalent all through the markets today, where they did buy signals and closed right on the T line. So that's why it's going to be very important to see how these markets open tomorrow. LPCN was pointed out on Friday as a kicker signal, and you can see what happened after the kicker signal. Continued strength. This is your strongest reversal signal, and the candlestick signals is that kicker signal, which, well, shuzzbutts. I had one. Huh. Oh, maybe that's it. MBT. Notice what MBT did today. Kicker signal that closed right on the T line makes this very simple. If this opens positive, you want to be buying immediately. There's your next target, or it could even be stronger than that. No, I didn't intend to leave the 3T off. I've got 3 or 4 different charts that I have up every day, and I just happened to grab one tonight that apparently didn't have the 3T on there. Island reversals can be both bullish and bearish, depending on where they occur. Obviously, a bullish island reversal occurs in the overbought or oversold condition, and a bearish one occurs in the overbought condition. This one's got a nice J-hook pattern, and notice what got this one started, that kicker signal. Wouldn't be afraid to be buying this one with the expectation now we're heading for the 200-day moving average. Okay, reports on Tuesday morning, all right? CNX. Nice little gap up on a little scoop pattern. First target is this one, which means they're moving away from the T line, making the 50 or the 200-day movement a next viable target. AKRX, nice J-hook pattern closing right on the 50. This makes these trades so easy as far as your entry. But if they open up positive, it's telling us they're breaking out through this level, they're breaking out through the 50, and you got a J-hook pattern in progress. Just a high probability trade setup and a very easy entry strategy. ANFI, there's your hammer kicker type signal. There's your obvious target. What did this tell you? It was profit taking, and what did this tell you today? The profit taking was over. Cons, right here on the 50 with a bullish engulfing. Notice what your T-line's doing. You got the T-line crunch. They get this pushed through on a positive open tomorrow. Another one that can move move up to the 200-day moving average. And SEMP, J-hook pattern right off the T-line 50. Next target at least, maybe even higher than that. This one you buy on positive trading tomorrow and just use the T-line as your stop. STKL, there's your doji sandwich breakout from the 50, which implies there's more upside, so your next target now becomes the 200-day moving average. And L3, little inverted hammer, doji, right off the 200, wave 1, wave 2, going into wave 3. This probably can be a very good options trade tomorrow. And 8, little scoop type pattern, wave 1, wave 2, slingshot effect going into wave 3. Whoops. Yes, if this opens positive, you want to see it trading positive. If it comes back down through the 50, that's telling you it's not moving in the right direction. I'd close it out, probably even intraday. Now, that'll also be a function, too, that if all of a sudden we see the markets are down 140 points after it traded up for a little bit, yeah, that's telling me we're having a hard time getting through the 50. This one should be opening positive and trading positive. That's what we would expect coming out of that J-hook pattern. Okay, as far as the short side, now this one was started out nicely today. Cabela's with your bearish Harami right on the 50, kind of right here at this downtrending channel with a gap down from the bearish Harami. If you're short, you stay short. You don't want to see it open positive tomorrow. If it does, same scenario. See if it resists at the T-line and starts back down. If it opens lower, you can start shorting this one immediately because there's the gap, there's the downtrending channel, and this is where you kind of observe the obvious. The obvious is right now it's in a downtrend, and it's having a hard time getting back up through the resistance levels. Polaris, as you can see, this one had this downtrending channel. Where's your next target? The lower end of the downtrending channel. If this one opens lower tomorrow, you definitely want to be shorting it or buying puts on it with the expectation that it's coming down into this range. We've been short Micron. Micron, you just stay short. At this point, you got to be a little bit more attentive, watchful. You've done a doji. You're down here in the oversold area. So where's the logical place to put a stop? If it opens positive and trades back up through today's high, you close out the short position. I would tell you that's exactly what's happened here with that doji in the oversold area, is that was the reversal signal. Now we went short on Depot early, and it closed right here at the T line after a doji gap down. So we haven't closed this one yet, but again, it has a very simple criteria. If it opens positive tomorrow, you close out the position because now you've got an uptrending channel. If it opens lower, you stay short and then don't let it see it come back up through the T line. When you say opens lower, do you mean below the prior close? No, just below the prior close. Yeah, remember, that's opening lower, is opening below where it closed the night before. Wolverine, get ready to short this one on weakness tomorrow. Your stochastics are heading down. You can see the trend. If it opens weaker tomorrow, now your next target is still with that doji sandwich potential down here, probably down toward the $15 range. And Build-A-Bear has been weak. You can see how this rolled over, bearish engulfing, doji sandwich, doji. If this opens weaker tomorrow, another doji sandwich is in the making. Remember, that big gap down, either that was a reversal to start taking you up, or that was going to add more fuel to the downside, which apparently that's the direction that it's going. And Tiffany showed some strength at the end of the day, but it didn't do any reversal signal. All you have is an up day in the over or in a downtrend. Now, if it does open higher tomorrow, I'll probably close it up. Still a potential bounce, but same scenario. If it opens positive and then starts trading back down through the where they opened it, you can always reshort it. And once again, that's still going to be a function of how the markets act tomorrow. And Isle of Capri, there was your doji sandwich. There was your failure to support at the 50, making this your target. And if it doesn't hold there, making the 200. Yes, a piercing signal has to open below any of the previous day's trading, not just the close, the previous day's trading. So it has to open below the whisker or the tail. JMEL, slow rollover, broke this level with a bearish doji sandwich. I'd suspect there's still some more downside to this one. And Paycom, notice the kicker type signal that took you down through the 50. I'm sorry, through the T line. Then notice what they did today. They came back up and hit the T line and failed and traded back off. This makes for even a very good day trade that if it opens lower tomorrow, what do we got going? A bearish doji sandwich. What's the magnitude of that candle? Probably the same as this, which basically brings you right down to the 50. So if it opens lower, you can be shorting it on a day trade. If it hits the 50, you cover your short position. Tiffany, no. Where did Tiffany have to open if it was going to create a piercing signal? Oh, Jim put it has to open below the low of the previous day and then come back up. Yes, below that level right there. All right, so tomorrow on how they open these markets will be very important. With the stochastics not quite in the oversold area yet, it becomes important to see how they open. If they open it lower, there's still a good possibility they could take it right back down and that today was just a one-day bounce. Okay, so with that, are there any general questions on candlesticks? If people are typing, yes, that is a piercing signal. You're in the oversold condition, open below any of the previous day's trading, and closed more than halfway up. That is a piercing signal. On top of that, look how far away you are from the T line. So that's got a very good prospect of heading higher. Does piercing signal on a major average mean something? Yeah, usually it tells you that's where the buying was coming in. Except there's not a major moving average. Oh, let's see. No, not there either. But it's at the T line. Do you consider future earnings dates? No. Well, I do if I'm buying something and I know obviously there's an earnings report in the next day or so. I'll make sure that it's maintaining a strong signal. And if you go back to the basics of candlestick, which is that they are the accumulative knowledge of everybody buying and selling during a particular time frame. If they're buying going into an earnings report, that means somebody a lot smarter than us knows what's going on, and that's what the decisions are. They're buying going into the earnings. If a day opens, how you expect? Aaron, how long do you wait to make a trade? Usually somewhere between 30 seconds and 90 seconds if everything's moving like it should. I know stocks don't always move as expected, but based on your years of trading, what percentage of the time do the moves actually go according to your expectations? John, I would guess at least 70% of the time. But that's also including that if a stock doesn't open in the direction you expect it to, that during the day it starts moving back up, confirming the buy signal. So I would say, and that's a big part of investing, that if 30% of your trades aren't going to work, don't let that be a emotional setback. Just acknowledge in your own head that when you put on a trade, there's a 30% probability or possibility that that trade's not going to work. So if it doesn't do what it's supposed to, close it out and move on to the next one. At some point, your portfolio is going to be predominantly profitable trades because you've moved out of the ones that didn't work very quickly and you're holding on to the ones that are working. Do gaps create a resistance for follow through on the piercing signals? Do the gaps? I would suspect that if this came back up, the resistance level is going to be this little trend channel right here, which is also going to coincide with your T-line. So if I was buying this one on positive trading tomorrow, I'm going to watch to see what it does at the T-line, which is right there anyways. Let's see. What time do you look? Well, if I'm buying something I'm usually trading, I'm a swing trader, so I'm trading off the daily chart. So if I was going to buy this tomorrow, it's because of the daily chart telling me it was starting to move up. If it opens positive and the markets are opening positive, I'm probably buying within the first 90 seconds. On the other hand, if this opens lower, because the market is opening lower and kind of lollygags here, and then starts moving up, it may be 45 minutes later when the market turns or the market doesn't go down anymore and this starts moving up, that it might come up through the previous day's close, telling me the bulls are still there. That's when I start buying. So, and that could be off of my 10-minute chart, that if it opened lower, wasn't moving around, the market was trading lower, then I'd start flipping to my 10-minute chart and watching the market to see if it was leveling out and starting to come back up, or if this stock started moving up on the 10-minute chart. What is your percent short position? Oh, Don, I'm probably 50-50 right now with longs and shorts. A follow-up question. Follow-up question. Do you tend to be in all in this kind of market, or are you mostly in cash in just a few positions? John, I would say 90% of the time I am 100% invested. And that doesn't necessarily mean I'm all long or I'm all short. In a market like this, I might be 60% short and 40% long. If the market is really cratering, then I might be 80, 85% short and 15% long. If the market's in a nice steady uptrend, I might be 80, 90% long, 10% short. Let me pick out some spots. When the market was in these conditions right here, I was probably 50-50. It's when they start moving like this that I'm coming out of the short positions and adding to the long positions. Up here, started closing out the long positions and started adding short positions. So right now, the only reason I'm 50-50 short is there's still a few positions that continue to act well that haven't really provided any sell signals. Whoops. Like this one, or pshaw. Things like this, things like this. This is just a fine howdy do. Get rid of this thing. So there are positions that are still acting well. How does build up the nerve? How does one build up the nerve? It's not that you're going in all long or all short. If you look at it, that if you have 10 positions on and 4 of them are short and 6 of them are long, you're basically very slightly exposed to the long side. You still got charts that if the market pulled back, that those long or those shorts are going to work. And yes, Don's had their correct answer. Because candlestick scans can easily recognize which positions are strong longs or shorts, that it's not a problem of having positions to get in. The only problems are, how do you narrow down which positions to be in? Because you're going to have more stocks or more stock charts showing you good longs and good shorts than you have money to invest in. So at that point, it becomes a cultivation process to see which ones are the best. So if I'm 100% invested, I'm very comfortable with that because I know the ones I'm in long have good charts, tell me the probabilities they're moving in my direction, and the shorts, good probabilities are heading down. So I have no qualms with having all my money exposed at any one time. Mark, that's all up to each individual, but I always maintain kind of right around a 10 figure, that if I'm, say I've got a $500,000 account, that means I've got 10 $50,000 positions. And I keep them all as equal dollar amounts, because the worst bugaboo that each one of us have, I say each one of us, now kind of using me as my example, the worst thing that I have going against me is my own emotions. So it boils down to that if I put on a position and I decide that this is the best looking chart, that if I'm normally in a $50,000 position, I'm going to buy $150,000 of this because it looks so good. You can bet your sweet bippy that when I'm watching stocks the next trading day, probably 90% of my attention is going to be on this one versus the other 7 or 8 that I have in my portfolio. And what happens then is I've already put my emotions into this trade because I think it's better than everything else. I forgot what I was saying. That's just great. Why you shouldn't drink when you're doing these sessions. Oh, that if this starts backing off, what's your first inclination? Say, wait a minute, my intellect said this was going up and it's backing off a little bit. That means everybody that's not quite as smart as me is not understanding why it should be going up. So it backs off, backs off, and backs off, and finally you say, man, this isn't working, get me out. You're getting out here when you probably should have gotten out here. So I keep all my trades at equal dollar amount, because if it's not working, even if I think it's the best position in the world, if it's not working, I can mentally say, all right, close out this unit and go on to another unit. No, once I get into a position, Eve, if I like this one and it looks good, but there's a little bit of doubt, I might buy half a position. And as it keeps confirming, I'll buy the other half. But I don't want to spend all my time thinking about adding or getting out of positions. Now, when I do have a position that might have a big profit in it, I might come out of half the position and then see what the other half does. And if it keeps running in the same direction, at least I'm still in a half a position that's in a high risk area, because it's already in an area where I should be taking profits. And then if it moves up some more, then I might take off another half a position, meaning now I've only got a quarter of a position on. So everything I do when I'm investing has one underlying element, and that is keep my emotions out of my trading, because that's what's going to kill me. So once your emotions get involved, your thinking process becomes clouded, because now you're working off of fear or greed. You're not thinking about what you should be doing with the trade. You're thinking about what's it doing to my account, or man, I'm in a bad trade. I can't close it here because I'll have a big loss. I always tell people, look at the chart and let the chart tell you what to do, because the market doesn't give a hoot where you bought or where you're going to sell. It's going to do what it's supposed to, or it's going to do what it's going to do anyways. You have to decide whether that's the place to be in or out. Okay, I guess I've kept you long enough. Go ahead, Jim. Go ahead and do the double line. And do the next double line. We can stop the scrolling. How do you manage watch multiple positions and new entries? Do you use alerts? You can, but if you only got 10 positions on, you can go down through that and now analyze 10 charts in probably less than 30 seconds. Even less than that, because all you're doing is clicking down to see if there's anything changing in those positions. I trade futures all the time, Robert. That's what I was saying, that we're short right now live cattle, because once it broke here and then headed down, we covered the position and then re-shorted when it did the bearish engulfing signal on Friday. Then it gapped down. And then because I couldn't get any more, because it was already gapped down the limit, then I went ahead and looked at the cattle or the lean hogs. And at that time, lean hogs were trading up in this area. And I think they opened positive. I shorted some as they came back down through the previous close, because what did we have? We had a left-right combo failing at the T-line. It opened positive, and it showed they were still selling off after they opened it. So I shorted some here, and I shorted some here. So what type of pattern can I recognize in this? Kind of a bearish J-hook pattern. Okay, let's take a gander at some of these. Pandora. So I trade, yeah, Robert, that's a long answer to say yes. I trade futures during the middle part of the day. I've got probably, if I've got 4 or 5 options positions on in one little account, or my little trading account, I've probably got 2 futures positions on. Pandora, you stay long as it stays above the T line. SA, I would think that if it broke through this level, meaning if it opens positive tomorrow and you want to be buying it, that wave 1 went from 550 to 950, I would think this would go from $8 to $12 on the next move. We did these WDC. If this opens positive tomorrow, I'm going to close out the short position. Got good profits in it. And then just see what it does at the T line. Tiffany, same scenario. If this opens positive, I'll probably close it out, but then I'll be ready to re-short it because there really isn't any reversal signal here. And when same thing, bullish Harami near the oversold area. Doesn't mean there's a strong reversal. It means there's probably at least a bounce. So if it opens positive, then I'll see what it does once it gets to the T line. Pause. Stay long on this one. As a matter of fact, you could still be buying this one on positive trading. With such a reversal in the market today, I don't know what. Go short today. Just watch what they do in the morning. Yes. Yeah, this wasn't a reversal. This was, remember, we're not quite in the oversold area yet. So some of these that had downward charts that bounced up, expect them to come up and test the T-line. Then watch to see what they do. If they start fading from there, where was it? Oh, I forget where. I'm trying to see. There's been days where they gap up right to the T-line and then immediately start selling off. I can't remember which ones were doing that recently. But if they can't get above the T-line, you're still in a downtrend. INCR, just stay long on this one. Use the T-line as your stop. And, something out of each sequence. ECA, that's got the piercing signal right here at the 50. Bullish confirmation. All you can do with this one right now is stay long until you see a sell signal. You also broke this downtrending channel with a piercing signal. Stochastics still heading up. Pretty much tells us there's still more upside to that one. Nothing here. This is just an up day and a downtrend. I would suspect this is still going to be heading lower. And Facebook, nothing here yet either. Now, if this does open positive, again, your stochastics are heading down. If it does open positive, I'd close out a short position, but I'd watch to see what it does if it hits the T-line, because if it starts failing there and backing off, then I can always re-short it if it comes back down through where it opened. HMSY, just stay long. Nothing wrong with this chart. Well, if it opened positive tomorrow, then it'd be what you'd call an abandoned baby. If it gapped up. Remember, when you have that one signal by itself with a gap up, that's an abandoned baby. But I'd be a little bit leery because you're not quite in the oversold area yet. I wouldn't jump into it with, well, positive I would, but then just watch to see what it does once it gets to the resistance levels. The S&P 500, same scenario. Looks like they're going to come up and at least test the T-line and the 200. Monsanto, not a very exciting stock to trade, but it's trading in a bullish trend. You can be buying this one on positive trading and just hang on to it as long as it doesn't close below the T-line. AMAT did kind of your little gap up. I would suspect at least a 45-degree in the next wave, which would take you up probably to the 200-day moving average eventually. And Johnson & Johnson, Morningstar signal. Makes this very simple. If they open up positive and trade positive, you can start buying this one. Another J-hook pattern in progress. But again, how they open these stocks tomorrow will be very important as far as what they're planning to do with the trends. TJ Maxx, bullish engulfing in the oversold area when they gapped it down. Same scenario here. If it opens positive, they're probably bringing it up for a while. I'd close out any short position. PayPal, not quite a bullish engulfing. So I'd suspect if this was anything, it is a bounce back up to test the T-line. SunTrust, that's your bullish engulfing. Once again, very important to see how they're going to open it tomorrow. If they open it lower, your bobble is complete. You're still heading back down. If they open up positive, you can be buying it because you got a J-hook pattern in progress. CTL, another one that looks like it, as long as it stays above the T-line, you can stay long. And LPCN we showed because of the kicker signal. You stay long until you see a sell signal on this one. Buffalo Wings, nothing yet. I'd say nothing yet. If you're short, if it opens positive, close it out, but be ready to reshort this one as long as they can't get it above the T-line. Oh, GNC, same scenario. Look for a bounce. Watch to see what it does once it gets to the T-line. I think we did all of these. Amazon, if it opens lower, look for it to head down to the 50. Price line did hit the 200 and started bouncing up. This one will move in the direction of how they open it. So if they open this one positive, look for it to at least bounce back up to the 50/T-line area. Mobley, stay short. Look for a bearish doji sandwich. What was the instigator of this one? A big bearish engulfing signal right here at the resistance level. You can see kind of a big slow curve. If they open this one lower, you want to short immediately because that essentially tells you they're not going to be holding this support level right in here. Ellie Mae, stay short. Ever since your big bearish engulfing signal, gap down through the T-line, you stay short. Westport, another one where you stay short. If they open this one positive, you cover real quick and then just see if they start selling back off from there, you can reshort it. NTAP, nothing here. This was just an up day and a downtrend. I would still suspect you're in a downtrend on this one. GMCR. Let's make this. Same scenario. Positive open, close it out. Then if it came back down through the halfway point of that candle, you reshort it. Salesforce. Same scenario. Close it out on positive trading. Be ready to reshort it because a lot of these aren't in the oversold area yet. ExxonMobil did bounce off the 50 with stochastics just getting in the oversold area. I'd be ready to buy this one on positive trading, even though I wouldn't buy this one. But if you like this one, if it starts trading up through the T line, got wave 1, wave 2, wave 3 in progress. TNK, another one you can buy on positive trading after your left-right combo bouncing off the 50. Stochastics are still heading up. If it opens positive, it's breaking that downward trend channel. That's a good-looking chart. And MTDR, you can stay long on this one. Wouldn't be afraid to be buying this one on strength. Just use the T line as your stop. RLYP, nothing there yet. This is exactly why you wanted to see what they would do with this one the next day after a bullish engulfing. They didn't open positive. They didn't get up through the 50. As a matter of fact, I'd still be ready to short this one on weakness because that tells you the bearish engulfing, failure to get back up through the 50 / T line area, still taking you down probably to the bottom area of this trend. The 20-year notes coming up a little bit, supported right here, just telling us that there isn't any real, well, as far as trading the bonds, if this opens positive tomorrow and trades positive, you want to be a buyer because the first move is to fill this little gap, which also gives you some momentum for heading up to the 50-day moving average. OPK, hold back right where you would expect it to, right on the T line. If this opens positive, you can be buying, telling you the T line's acting as support. FedEx, if you like this one, it's not very prolific as far as movement, but you can be buying this one on positive trading, or at least if you own it, you stay long. Northrop, all the defense stocks had big moves after the inverted hammer. This one you can stay long as it stays above the T line. And NKTR, same scenario, just stay long as it stays above the T line. Strong bullish signal on Friday. Inverted hammer, bullish confirmation, break through the 50. You can stay long on this one. I wouldn't be afraid to be buying it. At this point, if I was buying it, I wouldn't want to see it close back below the 50. That would just tell me that they couldn't get up through that level. AM, stuck here in between the 50 and the 200. If you're buying this one on positive trading tomorrow after the left-right combo off the 50, just again be very conscious of what it does once it gets back to the 200-day moving average. Level 3, you can be buying this one. Same scenario. Watch what it does once it gets up here to the 200. So we did Netflix, ACAD, stay short. SA, you could be buying this one, especially if it comes back up through today's open. Staying above the T line. Gold just not able to get out of its own way ever since the big left-right combo here. They haven't been able to get back up above the T line. Conoco, oh, this isn't Conoco. This is Cabot. Cabot, you can get ready to buy this one on positive trading because of your big morning star signal scoop type pattern. look for a slingshot effect to take you back up to the 200 area. And Bidu, just stay long on this one as long as it stays above the T line. Goog needs to stay up above the T line to tell you the markets are going to stay relatively strong, which means it has to open positive tomorrow. And Neo, nothing here yet. Right now you should be out of this on the long. You can always buy it back when you see that close above the T line. Navi, you just stay short. Expect it to come back down and test the lows. Starbucks, looks like it's came back right to where you would expect it to come back to, the 50-day moving average. Getting close to a piercing signal. I wouldn't be, if I was short, I'd be covering this on a stronger open tomorrow, and I wouldn't be buying long until you see it open up above the, or close up above the T line. Let's see, Mom, is that Apple Mom and Chevrolet? Atwood, nothing here. You can see there's no trend to this one right now. At this point, if it opens positive, I'd close out the short position. If I was going short, I'd wait for it to come back down through today's open. That would tell me that the bears are still in control after that big bearish signal. This one is a little doji gap up. You can buy this one on positive trading. Just be aware of what it does once it gets to the 50. We did Starbucks. I think we did MSCI earlier. A little morning star type signal left to right. You can buy this one on positive trading. SSO, see if it bounces to the T line. BABA, see if it bounces up to the T line. Valero, you can get ready to buy. Bullish engulfing. This one you can buy on positive trading tomorrow. And SPHS came right back to where we would expect it to come back to, right smack to that dab to the T line. Now you can look to start buying this one on positive trading tomorrow, and then just use the T line as your stop. Did we do price line? Oh, yes, we did that one. We did KPTI. You can buy this one on positive trading. AMBA was getting hit. AMBA right now, if I was short, I'd stay short. But if it opened positive tomorrow, I'd close it out, because that's telling me I'm starting to see support in this area after kind of a doji at the bottom. Guild, same scenario as the rest of them. If it opens positive, close it out. You can always re-short it. American Air, I think, still traded weaker. If I was short on this one, now this would have been a perfect case that if you were short and they gapped it down in the oversold area, that you put your stop at the open. If it came up through there, you want to take profits. If I was short and it opened positive, I'd close it out, and then I'd put a stop right where it opened today, that if it came back down through there, the sellers are still in control. Boeing should have closed it out if you were short, because it traded back up above the high of yesterday or of Friday. Having a position sizing discussion is that I need to close out probably. Gig, take your dollar amount and divide it by 10 or 8 or 12, whatever. I don't, if you get too many positions, then each position isn't significant to the return of your capital. 10 positions to me tell me but each one needs to be paid attention to because it's 10% of my portfolio. But it's not so big that if something devastating happened to one of my positions, it's not going to kill the portfolio. That was Boeing. Oops. That went somewhere out in Never Land. This is the Canadian dollar. You stay short until you see a confirmed buy signal. An ACHN. I'd get ready to buy this one on positive trading tomorrow. They have a doji sandwich coming off the T line into a J-hook pattern. CVS. I don't know. To me, this is just a quick bounce. You didn't really have a reversal signal down here. You just had positive trading. Exoma wouldn't be long or short. There's no direction. Yes, and live cattle, our short positions have been working. Covered the short positions over here and then re-shorted it because it was telling us we have a bearish J-hook pattern. And that's, again, why we went also long or short in lean hogs, because it had a bearish J-hook pattern in progress. Let's see, Tesla. Watch to see if it opens positive tomorrow, and then watch your T-line. Yeah, unless the market tomorrow has another big day, like another 200 points to the upside, I would kind of guess that there just kind of be a waffling day and then continued selling after that. REGN, another one that you can buy on positive trading, telling you that the Morningstar signal is working and this little downtrending channel is being breached. Did we do Bidu? Bidu, you can be buying this one on positive trading after today's bullish engulfing. PRMW. If this one opens lower again tomorrow, you can still be short. Just watch what it does when at the 50. ConocoPhillips bounced right off the 50. You can buy this one on positive trading. Just don't let it close back below the T-line once you bought it. And ATVI. Nothing here to get excited about. Just a lot of whipsaw, and it's basically moving sideways. I'd be someplace else. Electronic Arts. If you're short, you stay short. I wouldn't short it here because you're already in the oversold area, but the expectation would be down to the 200-day moving average. Yeah, we did the SPY. Buffalo Wings. Nothing here. It's sideways at best if you're short. If it opens positive, you close it out. If you're ready to go short, you use today's open. If it came back down through there, you've got that little bearish scoop pattern in progress. Alcoa. Another one. See what happens at the T-line. Gig, if you have too many small positions, that means if one of them moves, it's still not going to affect your portfolio any. So what I discovered is when I had lots of little positions on in the past, one could move fantastic, but it was so small that it didn't do anything to my portfolio, which also meant if it was a small position, I probably didn't pay as much attention to it. And so if it was drifting down, it didn't really bother me because it was a small position. If you keep all your positions of the size where each one has an effect on your portfolio, you're going to pay a lot more attention to it, so that if it's not working, you definitely close it out and move on to something that is working. BDSI, right now I wouldn't, not anything real exciting except a very slow uptrend. If you like it, you can stay long. PSX, Phillips 66, another one you can buy on the J-hook pattern on a positive open, using the T-line as your stop. Nippon, big fry pan bottom, hard to trade because it is an ADR. But at this point, if you like it, you stay long as it stays above the T-line. And kicker signal on MBT. That one I would be buying on positive trading tomorrow with the anticipation your first target is at the 50-day moving average. Okay, kept you up past your bedtime. With that, we'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.